Hey everyone, my name's Andy. My channel's Finding Value. Hopefully you're having a good day. Welcome if you're a new subscriber. If you haven't subscribed yet, please subscribe. Click the thumbs up button if you like this content. So, we had a question. ETFs versus individual companies and why? Why? All right, so let's pop in here and I'm gonna give you my opinion. Again, this is just my opinion on ETFs or individual companies. So one, I like control. So what I do is I create my own fund of companies. I get to skip out on the fees and the taxes that those ETFs get when they buy and sell those companies. I prefer to make my own decisions on what companies I own and the timing of purchasing of those companies. I like creating my own mix. This is all about control. I don't like taxes and I don't like fees. And a 1% fee, if you were to calculate that out, turns out to be many hundreds of thousands of dollars if you do the calculation over time with a good amount of money. So performance. If I can get the timing right using ratios, why the heck would I want to use anything but what's in my control? I want the max leverage for the most of my speculative portfolio. Individual companies provide that max leverage. ETFs do not, in my opinion. I push royalty companies and mining companies. I do have explorers for the thrill of finding more. I do have that. And I research management teams and properties and take into account jurisdictions. That's how I get the performance that I do. Now ETFs, they have fees. I do not like fees. I'm like anti-fee. I hate getting nickel and dime to death anywhere in life. Doesn't matter if it's investing, it's anything in life. They might work well for people who are just starting out, who don't have a large portfolio. They can't diversify. They can be a way to gain exposure to something without all the research. So if you don't want to do the research, an ETF is just fine. If you have a small portfolio, it can be a way to diversify and protect yourself if you don't have a large portfolio. And I would rather use precious metals, physical precious metals, and swapping them based off of ratios because it costs less, has less risks, and less taxes. So when I view it, this is me, I'd rather than do an ETF, I'd rather just jump into gold, the physical holdings of gold, silver, platinum, and then swap those when the ratios are favorable for the undervalued metal. You swap the overvalued to the undervalued. That's what I would do. I would not mess around with ETFs. But that's just me. So here's an example here. We've got the blue line is discovery metals, the yellow line is metallic minerals, and the bottom blue line is SILJ. That is the difference over a 1-year period right there. That is what it looks like. I'm going to go down here. I think this one is 1 year. I'm trying to remember what this is. Metalla MTA is the light blue line. The gold line is actually, I think, SLV, and the blue line SILJ. So the yellow line actually outperformed, or was very close. I can't remember which one was which now that I think about it. Damn it. I think SILJ is just the one in between. The yellow line, silver is the blue line, and MTA is the one above it. Now this is what it looks like 5-year chart. That's Metalla royalty, and that's SILJ on the bottom and SLV on the bottom. Basically they went nowhere in comparison to that. So I would prefer to diversify my wealth amongst a couple different royalties, because if you only get 1 or 2 of these big ones, your betting strategy, if you spread it across a couple of them, if one of them hits or 3 of them hits, you're going to absolutely destroy an ETF or an index. Absolutely destroy it, because that's a 40,000% return. That's holy crap, that's actually quite a bit. That's 40,000, because that's a 400 times your money. Wow, that's incredible. So, ETF performance. I see ETFs as a watered down approach to not doing your homework. This doesn't mean it doesn't have a place in some of your portfolios. I prefer to hold physical metal and do swapping based off of ratios versus ETFs. This is solely my opinion, and it should not be your opinion. Think for yourself and what your situation is. I have over 20 years in the market and have studied this stuff pretty intensely over a long period of time. So keep that in mind. I'm going to have a lot different viewpoint because this is what I'm passionate about. Some people aren't passionate about this stuff. So the conclusion here is I like having control over my investments and I want the performance of individual companies. I view ETFs as a watered down approach that I don't typically use. I really like physical metals and ratio type investing for swapping metals back and forth. I use royalties as my way to leverage the price of these commodities because they have a superior business model. So I go with investments that have the highest quality with the least amount of risk. If I can get a leverage that's 10 or 20 or 30x with very low risk, I'm going to take that bet versus something that could potentially get a 60x, but I have to take 4 or 5 times the risk. I just don't want that risk if I don't have to take it with the majority of my money. Now I'm hitting full risk on a lot of my plays that I share. I'm hitting the full risk button because you hit the full risk button when the risk is the lowest time to do it. You use your technical analysis, you use all those things to hit the high risk button at the lowest risk times. ETFs, what it's doing is if I know where all the least risk spots are, where the valuations are way down in the dirt, why would I limit my upside when I can hit the high risk button at the lowest risk spot, if that makes sense? Why diversify and have a low risk option when I can hit the high risk button with the gigantic amount of returns if I know the valuations, if I can read charts, and if I can do all these things? ETFs is a way to basically limit your own naivety, I guess, or ignorance. Because if you haven't done the homework, then you go into an ETF to protect yourself from yourself. That's kind of how I view it. And keep in mind, I'm not anti-ETF because if you don't know much about the sectors and you don't want to learn about it, then an ETF's probably fine for you. That's the trade-off. It takes work to do the outsized returns. And if you're not willing to put in the work, then an ETF is just fine for you. So this is my opinion. If you like this content, click the thumbs up button, subscribe if you haven't. Hopefully you have a good day. This is Finding Value.